Hi, everybody. Welcome to the SRAX call. We'll give it another minute as people start to load in. There's still some people joining in. All right, we'll get started. So thanks everybody for joining us today for the SRAX update call. This is a long overdue call, going over Q1 numbers and also just talking about the business in general, and giving you an update where we are with everything else. Let's see here. So here's our safe harbor statement. We're missing the amazing person to read it today, but the presentation contains certain forward-looking statements that are based upon current expectations and involve certain risks and uncertainties within the meaning of the U.S. Private Securities Litigation Reform Act of 1995. Words or expressions such as anticipate, plan, will, intend, believe, or expect, or variations of such words and similar expressions are intended to identify such forward-looking statements. These forward-looking statements are not guarantees of future performance and are subject to risk, uncertainties, and other factors, some of which are beyond our control and difficult to predict and could cause actual results to differ materially from those expressed or forecasted in the forward-looking statements, including without limitation statements made with respect to expectations of our ability to increase our revenues, satisfy our obligations as they become due, report profitable operations, and other risks and uncertainties as set forth in our annual report on Form 10-K for the year ended December 31st, 2022, and our subsequent quarterly reports on Form 10-Q as filed with the Securities and Exchange Commission. All forward-looking statements involve significant risk and uncertainties and could cause actual results to differ materially from those in the forward-looking statements, many of which are generally outside the control of SRAX and are difficult to predict. SRAX undertakes no obligation to publicly update any forward-looking statements, whether as a result of new information, future events, or otherwise. All right, now that we got that done, for the benefit of anybody that's new to the call, we're going to cover a little bit about what the Sequire and what the SRAX business is, what we do, and give you an update on how those businesses are doing. So SRAX is made up of basically 4 different components. We have our Sequire element, which is our Sequire is our core SaaS product, and this is a product that allows us to help companies understand the movement of their shares, who's buying their shares, who's selling their shares, helps companies manage their cap table, helps them manage their movement of their warrants, their options, their employee options. It allows them to manage their S3. If they have an S3, it allows them to manage all of their financing. So if companies have different financings that they're doing, they can plug in all the information about the financings that they're doing, and then the system will the system will then track all of those will track all of the activity. Then we allow the users to do their earnings calls through the platform, like you're participating in today. So it manages all the earnings calls for the different companies. It allows them to have insights into all their shareholders. So you can look and see the names, addresses, phone numbers, and information about those shareholders. And then the system allows you to email them and SMS them, communicate with them, send them surveys and things of the sort. Outside of the Sequire platform, inside what we call Sequire, we have a few other elements. We have the LD Micro conference, which is a live conference that gets around 300 to 250 to 300 companies participating in any one event. We have these events twice a year, and then those events are done live in person in Los Angeles, and we get anywhere from 300 to 600 live investors at those events to meet with those companies and hear their stories. And then through our virtual events tool, which is over here, we are then streaming those events live on the internet, and actually probably getting more people to participate in those virtual events than actually are live at the events. So we're streaming live. We've written software that allows different banks to launch their virtual conferences, and we have different banks utilizing our platform to launch their conferences. And the virtual events platform you can use it for live events and stream those live events, or they could be pre-recorded events. But this software we've written over the last couple of years, and now we're starting to see the monetization of that software. We bought LD Micro a couple of years ago to start to get a detailed understanding of the live event space so that we could write the software around it. And now we've gotten it to a point now where it's readily available, and we're having paying customers to pay us to utilize that software. And around all of this, inside the Sequire platform, we're building community. So we've launched a platform that's called SequireCommunity.com. And in fact, all the questions that are asked here today will be posted on SequireCommunity.com. If you wish to ask any questions about this event, you can go to SequireCommunity.com and sign up and validate yourself with a real name, real identity, real phone number. So, no hiding behind some fake name on a site and posting things that, may just very well not be relevant, but put real information about who you are, and you can ask information. The system will then tell if you're an actual investor in the company. We'll tell the company themselves if you own any shares in the company. And so that will be, that's a very exciting platform that we've put out there. We have around 50 companies that have signed up for that right now. And so that is a very cool platform that we launched this last year. So we anticipate having a lot of activity, and all of this stuff ties together within the Sequire platform. So the Sequire platform is more than just the SaaS platform. It includes all of these different things that are out there. So to give you an update on where we are with our filings, as many of you know, we got late in our filings. We had some issues with our previous auditor, wanted us to go seek some guidance from the SEC, which we did. And I won't reiterate that story. If you want to hear the details of that, you can listen to one of our previous calls. But on the, we got current now on Q1. Q2 and 3 should be filed before the end of February. And once that happens, we'll be current again. Markham's been doing an amazing job at getting these done for us. They have all the resources that are necessary to make this happen, and the very professional team of people. So we're very happy with the service that we're receiving there and the amount of attention that they're putting forth and helping us get this done in a timely manner. And then we'll go to file the, it says here, we should be current after the Q3 filing. So we'll be current between, the end of February and when we need to file the K. We may seek to file an extension to April 15th, just because Markham is so busy with getting, Q2 and Q3 done right now. Otherwise would have been working on the K, but now so we might file an extension there, and would hope to have that filed and be current then with the filing we'd be current at that point, but to have that all done by April 15th. So I hope that answers anybody's questions about where we are with the filings. We hired B. Riley this last year to do valuation of all the marketable securities. So we needed somebody to come in and validate how, from an accounting perspective, the marketable securities that we hold should be valued from a GAAP perspective. Instead of a price times quantity basis, what is the actual, what's the value that they see from a GAAP perspective? And so we hired B. Riley for this last valuation that you see on the balance sheet. That was a valuation that was done by B. Riley and their valuation team. So I think that, and then that valuation was then put forth to the Markham team, and Markham then agreed with B. Riley's valuation of the marketable securities. So we've done a lot of talking about, and just to back up a little bit for some of the people that don't understand the importance of these marketable securities, over the last couple of years, we've taken stock in exchange for both access to the entire platform, whether that is conferences or the platform itself, or media platform, things of the sort have all been paid for with stock from certain companies. And as you can imagine, this last year was a no fun in that arena. Now, thank God, we had the foresight to put into place the resets and ratchets into these transactions. So as the market came down this last year in Q1 and Q2, everybody was just going, oh my God, is this going to recover? And then all these small companies that we had stock in Q3 were saying, okay, this is not going to recover anytime soon. So if we need to raise money, we might as well start raising money now. And they started raising money again in Q3 and into Q4, and that continues into Q1 here. So the value of our positions gets reset when those transactions happen. So if we have, $1 million worth of stock in a company, and the value of that goes down 80%, and then that company ends up doing a financing when they're down 80%, we get made whole at that 80% level. And that's happened a lot this year, and in the third and fourth quarter of last year. So what does that mean? How do we recognize that? So the total value of those positions as of this call are around $14 million, just the resets themselves. So now when we get resets on these shares, what's unique about them is that the 144 tacking period of which we need to hold these shares, it tacks back to the time frame when we receive those shares. So it doesn't begin a new holding period for those shares. So this $14 million worth of marketable securities is either those companies have already been in a position where we can start selling them, or they're further along in the process, so the 144 tax back to when we got the shares. So, that's pretty significant. I think I skipped a slide here. There we go. So the first quarter revenue was around $7.5 million. That was a growth of 53% versus the prior year. On a non-GAAP basis, though, so if you look at the apples to apples from the prior year, because the year prior to this, the accounting treatment of the positions was around $4.9 million, did not include any discounts that were out there. Now, if you did the same thing on the $7.5 million worth of revenue, our revenue would be around $10.6 million for the quarter. So apples to apples, it's 4.9 over 10.6 over 4.9. So that's 116% growth in revenue in that first quarter. So the net income was around $3.7 million, which is significant increase over the previous year, because we had a big loss in the first quarter of the previous year due to some readjustments of some warrants. So it's around a $14.8 million swing to the positive side. We closed around 165 contracts in 2022. So that's a lot of contracts per day for the entire year. We had adjusted EBITDA of around $767,000 negative for the quarter for Q1. That was a decrease of $1.6 million over the prior year. We actually had an increase in a lot of expenses that were out there for that quarter. So you saw we were hiring up a lot of people, and we were growing like the economy was never going to end. And then this gives us 14 quarters of consecutive revenue growth. We launched the Sequire community. Right now, the portfolio is worth around $36 million on a price times quantity basis. That's not with the adjustments that we would see from B. Riley, which are representing probably around a 35 to 40% reduction in those numbers. And why is that important? Because when we get stock and payment for a contract, the value of that stock needs to be determined up front. So if it's, let's say that we got $1 million from a company, and then based on liquidity and hold period, B. Riley determines that that's only worth $600,000. So the $600,000 number is what's then used as the revenue over the course of the contract. So that's a very important piece to understand about our business. So where does that other revenue come in? Where does that? It comes in on the other income line down below. And so you're going to see that on a down below. So when we get these $14 million worth of marketable securities that are coming into the company, those don't hit the revenue line. They come in down below on other income. And so you're going to see big shifts in the the value of net income as you have changes in the value of those positions from quarter to quarter. And then really in the makeup of what we did in Q1 and from Q1 or Q4 to Q1, there was an adjustment where you saw some adjustment up. And I think in Q2, you'll actually see that same adjustment to the downside. So we'll have a downside on the adjustment in Q2, and then you'll catch up on that in Q3 and Q4. Let's skip these here. I already went through these. So one thing I forgot to point out on here is if you want to track the value of the portfolio and you want to bookmark this and see how it's going, we've now added the reset shares into this site. It's SRAX.com /stock-portfolio. And if you go to that site, it lists the current value of on a price times quantity basis of the shares. So this is our facility down in Mexico. We have around 121 people in the organization. As you can see, that's a big reduction from our last call. We had 153 people on the last call. So we've cut a significant amount of expenses out of the equation as we started seeing the fears of the economy slowing down. And so we were quick to adjust there. So down in Mexico, we do all of our development. We do a lot of our video editing, all of our QA, a lot of tasks. Actually, we do a lot of management of our stock portfolio. So the team that helps on the accounting side is down there. So we have a lot of different activity that's down there. We've been down there now for around 10 years, and it's been a big asset for us. I think it gives us an advantage over doing all of that development in the United States. So here we'll go into a financial review. I know Mike Malone was a little bit under the weather today, so I think what we'll do is I'll walk through it, and then we'll leave Mike for the question and answers. So here you have the Sequire platform revenue of around 7.5 million over the prior year of 4.9 million. Again, that is not apples to apples, because the 7.4 or 7.5 million is taking a discount. And that, if you get rid of that discount, that's what got you to the $10 million number. Operating expenses increased significantly in that quarter. We've actually, subsequent to this, have reduced operating expenses significantly. We cut a lot of employees that were working on non-revenue generating functions and things that we didn't think were adding value into the company right now. And so we've cut those expenses subsequent to this. So you'll see in the forward, and that really, you don't really see the benefit of that until Q3, because we did a lot of the cuts in Q2 or the end of Q2, and in Q3 you still had some severance, and then so you see it in the end of Q3 and in Q4, and then we let a couple more people go in the first quarter of this year. So you continue to see a reduction in those expenses. I think we got a little bit ahead of ourselves on the hiring side last year. We were so busy, and I just think that we probably got ahead of ourselves of what we needed, and so now we're bringing that back down, honing it in a little bit, and getting a hold of those expenses. So we had here you could say the net income was around 3.7 million. Again, as I said before, that was a big shift from the $11 million loss, which included a readjustment for some repricing of some warrants in Q1 of the previous year. This is the difference between the fair value of the revenue and the non-GAAP revenue. So here you have the revenue that I just showed you on the previous page, 7.4 million. You have $3 million in adjustments that are coming off of that $10.6 million. So the true revenue on apples to apples is 10.6 over 4.9. So it's a significant increase. This is just price times quantity. This is adjusted for the valuations that are being set up by B. Riley. This shows you the breakdown of the revenue. Everything is everything is broken down into the conferences, or everything here was built into for the current year, for the current quarter, was built into the GAAP revenue. Prior year, you can see the conference revenue and other revenue broke down there. This is just a breakdown between the percentages of cash versus stock. So we're going to start reporting on this. In the third and fourth quarter of this year, we made a massive shift to pushing more towards cash-based transactions. Instead of taking as much stock, we made a push towards closing more cash transactions instead of stock, and you'll see that as we start to report these different quarters throughout over the next couple of months here. So our goal is to get to at least 50 to 60% cash instead of dominated by the securities position. Now, the good part about the cash is it's immediate and it comes in. The bad part about the cash is that companies tend to want to do smaller transactions on the cash side instead of the stock. When they're buying things with their stock, they're willing to spend more money than the cash at hand, especially a lot of these small companies. So you'll see that over the course of even though we booked a significant amount of new contracts, the value of those contracts was lower. And ultimately our goal is really to run this business just on the SaaS recurring revenue that's coming from the different monthly recurring activities that we have, as well as the conference money that's coming in. Because that's really, we think that if we can build that up to 1,000 companies, that's where the true equity will be built into this business. The money that comes into the Sequire platform from a media perspective, those customers come in and then they'll hire us and then they'll leave just from the media perspective. And the ones that are on the platform tend to stay a lot longer than the ones that are on the media side. So our goal is really to focus on those cash customers that are just on the login platform. So this is to give you an idea of the adjusted EBITDA numbers. So you can see here that last year we had positive operating income versus this quarter we had negative operating income, and we anticipate that this number, both on the operating income and on the adjusted EBITDA side, will shift to the positive side. Sorry. So this was just Mike's slide that was covering again what I talked about on the marketable security side, that for around $14 million worth of resets that are taking place, which is substantial because the whole value of the portfolio is only worth, I think, around $23 million, right? With and you add that 14 on, it's getting to you around $37 million. Now, what's significant about that? Why is that significant? Because that means that somebody's willing to fund these companies. Somebody's willing to give these companies additional capital to validate that they can stay in business and that they can continue to raise capital out in the market. And when they can validate themselves as having being able to raise the capital at those levels, and we get reset to those levels, then there's other professional investors that are making the decision that this is something that they're willing to invest in now. And so we get readjusted down to those levels and can theoretically, hopefully the market gets some kind of breathing room as compared to what happened last year. I mean, last year it was the whole year was just really, really tough. I mean, it was down every single month all the way until around November. Then it started kind of pacing out a little bit. And then, into December, it kind of stayed level and, a little bit, hopefully seeing a little bit of an upturn here in January. But as long as it keeps trading sideways, that's a good thing. And hopefully these, all these companies are starting to raise capital at these levels and we're getting reset down. And if the market could get any kind of footing, we can really benefit from that. So, and then that's been the story for this year for us has been very difficult from a liquidity perspective, because what we thought we were going to be able to sell every single month in marketable securities was always less than what we thought we were going to be able to sell for the entire course of the year, right? And now that we have all these resets that are kicking in and that we're able to recognize some value out of, it's also validating the value of the portfolio itself. Because if other people are willing to fund these companies, then that means they can raise money at those levels, and then we can benefit from that in the future. And so we're starting to see a stabilization of that. We have a lot of stock that is moving from our portfolio list that is being held in book entry into bank or brokerage accounts now. So we're doing a much better job in moving those shares quicker. It's not an easy process to do. It's very complex and we spend a lot of time dealing with it, but we're doing a much better job now than we ever have in the past in doing that. But we hope that the market gets some footing here, or it can even at least trade sideways for a little bit, so that we can continue to get value out of the shares that we're selling. This is the balance sheet. I don't know, Mike, if you want to talk a little bit, do you want to go through some of the balance sheet numbers? And I think that also a little bit of focus on the deferred revenue, so the analysts on the phone can understand the deferred revenue number here.
Yes, thanks, Chris. So just to jump into the deferred revenue, that represents the offset to the marketable securities or the contract asset that we record upon the signing of our Sequoia contracts, and that value represents the initial value of the consideration that we receive in exchange for our contracts, which is, to jump back into the marketable securities, the fair value on the contract date, which includes discounts that represent the lack of marketability in some cases, and as the securities have a 1/4 hold period that's a year or greater, we'll record a discount, and then if the perceived liquidity of the actual stock, not necessarily the position, but the actual stock in the market is lower in to be deemed not to be representative of an active market, we'll take discounts against that. And I should also point out that the value of these reset provisions, or in some cases most favored nation positions, is not included in the contract, in the initial contract value. It's not only until we receive the actual right to additional consideration under the contract do we record a benefit to other income representing an unrealized gain on the position. And so as of March 31st, we had approximately 16.7 million of deferred revenue compared to 12.9 in the prior as of 12/31, and the increase obviously represents the growth in our positions, and then that 16.7 will amortize off through the P&L or through the income statement in the revenue line item at over the following 4 quarters. in addition to to marketable securities, there's a approximately 500,000 worth of deferred revenue related to the LD Micro conference that we had in the second quarter. We start to receive cash payments well in advance of those conferences, and which provides assistance along the lines with our cash flow. So it's that obviously will flow through the P&L in the period in which we had the conference. I'll point out as well that we had contract receivables as of March 31st of 1.4 million. And you can see that's quite different from where we are today. So we've started to receive benefit under these reset and most favored nation positions, and it's one of these things where it takes us time to not only have this start to kick in for us, but we also have to become apprised of these financings. In some cases, we have to wait until these companies file their quarterly reports. They're not always these financings where a registration statement is filed where we can track it pretty close to when financing was done. It's sometimes we have to wait till the end of the quarter. So we've gotten more of a process around that, and so we think we are capturing those more timely. But it's definitely becoming a more material part of our business, as Chris has mentioned. So I think that was it, Chris, with the balance sheet.
Okay. Did you want to talk, if you could, Mike, a little bit and talk a little bit about how the adjustments in the marketable securities when we do receive additional shares hits the P&L, so that everybody could understand that as well, because I think we've had a lot of questions around that.
Yeah. So when we receive additional consideration under our contracts due to anti-dilution, or if there's a most favored nation clause where we have the right to move into the additional structure, we receive warrants or what have you, we that will just essentially be reflected as an unrealized gain in the period. So what we'll do is we'll add the value of those securities or that receivable to the balance sheet, and then take a corresponding adjustment to unrealized gain loss, just as if the quoted market price had increased. So we it's just think about it as an unrealized a pickup, an unrealized pickup, unrealized gain.
And then the goodwill number is pretty substantial here as well, and that goodwill goes through a analysis every year, and to see if there's any impairment on that goodwill. And so we hire a third party company to do that impairment, and thus far we haven't had too much of an impairment on that, but we'll be doing that again with this next 10K with Markham. So we'll with that said, anything that Mike, that you want to add before we open it up for questions?
No, I think you covered it all, Chris.
Great. Why don't we start with Todd? I think we have some people on the line now. So Todd Russman.
Yes. Thank you, Chris. Thanks, Mike. Can you hear me? Okay.
Yeah. Yes. Thank you.
Okay. Actually kind of went over it. My main question was I had the website URL where you have the portfolio, the value at resets. I'm seeing it's trending towards around 40 million. How does that as an effect? That comes in addition to your regular revenue, right? It's just converting an asset on the balance sheet to liquidity over time. And how has the liquidity been in some of those microcap stocks?
Yeah, it's been like it was the year from hell in 2022, as there was nothing good that happened in 2022 from our auditing to the market. So it was very difficult, and that but we managed through it. Even at that, as the market came down, we were taking the hits on the way down, but now we're seeing the benefit of getting those shares back. And so, a lot of people said, look, you're taking shares as payment, but the market's getting crushed. And we said, well, we have these reset provisions in there, and over time, as these companies do deals, we'll get reset. So now that they're getting reset, we're able to get a lot more liquidity out of those shares. And like I said earlier, the 144 hold period for those shares tax back to when we received them originally. So if they do a contract in month 5 and our 144 hold period is month 6, well, we only have to wait a month before we can start selling those new shares. And in many cases, the new shares are much lower and have significantly more value than where we started out. And especially in some of these deals, we have convertible debt deals that converted a discount to market. So as they do these deals at much lower levels, we're constantly getting reset. So I'm glad to see the market getting some stability here and not just getting decimated every single day. I think it's been a tough run for anybody that's in the stock market, but I think that things are starting to stabilize. There's a lot more deals getting done. There's a lot more financings that are getting done, and we're starting to see the benefit of that. And so the liquidity is starting to come back into the company, and we're catching up on a lot of things that we had put off, and so that's where we are with that. And so hopefully the market doesn't continue in 2023 like it was in 2022. And I think everybody on this phone probably hopes that, except for the people that want the stock to go down that are on the call to see what's going on. But everybody on the long side, I think, is hoping for that the market continues to stabilize here.
Okay, thanks, Chris. And then I guess a follow-up question would be: is your current market cap sits around 56 million? If I take out the 40 million, I know there's liquidity and other issues to get out of that. You still have the value of both the other businesses of Sequire and LD Micro, which I assume has some component of value. So you're trading at pretty cheap levels here, but I know that we're not alone in that. For other small cap stocks have all gotten hammered, as you already mentioned. Is that a fair assessment? Yeah.
Yeah, and a lot of them are our customers, right? So a lot of them have been coming down, but we're starting to see that a little bit of recovery for some of the names. What's amazing is that out of all the companies that we've done business with, we only have one company that's gone out of business. So we've had some luck in not having any that have really gone completely out of business. And there's always people that are willing to lend money to these small companies down here. So it helps us in getting reset and get reset down to lower levels. But like I said earlier, our ultimate goal is to transition this into all cash business. We aspire to a day when everybody is paying cash here. The stock business is like a drug. It's a little difficult to give up because it's very sometimes the revenue from it is so high, but the nature of that piece of the business is again, they come into Sequire, they become a customer on the platform, but they're if the customers that are on the platform that are paying cash, or smaller customers, they stay a longer period of time. The customers that come in and spend a ton of money at one given time, and then that when that contract's over, there's a much smaller percentage of those people renew again and again. The ones that do are seeing significant success. The ones that don't are the ones that are experiencing downturns in their business and things of the sort. So our goal is to get to a point where we're much more cash oriented.
Thanks, Al. That's all I had. Thanks.
Thanks, Todd. Why don't we go to Mike Crawford?
Thanks, Chris. So with the 165 Sequire contract signed in 2022, I believe you entered the year with 260 companies on the platform, although that's mixed between media and subscription, or what you might call platform customers now that you have community. What is the current number of companies on the platform, and would that include, I don't know if you can break that down between media and subscription?
Yeah, there's around 150 that are on Sequire, the login piece of Sequire, where they're doing the day-to-day activity of tracking their shareholders and things of the sort, and the rest are on the media side of the platform and on the Sequire community. So our piece that we're really interested in continuing to grow is just the login piece, where they're tracking the day-to-day activity of the shareholders and everything like that. Because again, those are the customers that are tending to pay more in stock and things of the sort. I mean, in cash. Sorry. Thanks, Sonny.
So I imagine there's a Venn diagram aspect where some are doing both, but what would be the total number of companies on the platform, media plus subscription, not double counting?
It's like over 330 something at this point. So what we'll do is we'll put this question, Mike, into the Sequire community section of in Sequire community. We'll add your question there, and then we'll put the answers of each of those and break it down to a total for you.
Okay, and then given the decline in operating expense that we should see sequentially in Q3 and Q4, and I suppose you said in Q1 2023, and the margin profile you expect to generate, what revenue do you need to be break even from an EBITDA perspective? And then I do realize this is before you get all these reset value below the line on top of that.
Yeah, so like if you look at the number here at the $7 million range, the way it's being calculated now, not the 10 million side, right? Like when we previously had anticipated that the revenue would be around 10 million without the adjustment. So down at 7 million, you're losing on the operating side around $1.3 million, and then 700,000 for the quarter on the EBITDA. So we just in personnel expenses in Q3, we lost around $250,000 worth of expenses on a monthly basis. So we're losing around $750,000 for the quarter just in that initial layoffs that we did. And then we were saving an additional after that, we were probably saving an additional $200,000 to $300,000 that are coming into place. So if the 700,000 was close to the would get us to the break even, then and you see an increase in that revenue, so maybe somewhere I'd say around the $6 million level, the $6 million in revenue, $6.5 million off the top of my head.
Okay, and then thank you. Final question is regarding bookings. So you used to give a bookings number, and I realize that those bookings are a little different from the revenue because that's a full, I guess, what you would call price times quantity number. But do you have bookings numbers that you can share with us for particularly the second half of the year or fourth
Yeah,
quarter?
so the total bookings for the year is going to end up at around $33 million for the year. So we'll end up doing around $33 million in bookings for the year. Now, keep in mind the shift in the third and fourth quarters, where the focus became much more around the cash-oriented clients, where that's why you see a significant number of transactions, but lower price point on total revenue of bookings. But recurring revenue is better from those customers.
Okay, great. Thank you very much.
Yep. Thanks, Mike. Louis?
Hi, Chris. Thank you for taking my call.
Of course.
I had a couple of questions. So first question is, in the first quarter, you had a gain of 5.4 million. And when you look at the microcap index during that period of time, it was down 8%. So can you just talk a little bit about how you were able to put out such a nice gain in a market that was pretty crappy?
Yeah, Mike, you want to take that one?
Yeah, Louis, what I should also mention is embedded in those discounts is a factor of marketability related to how long we have to hold the position. So as time passes, other things being equal, the discount rolls off, and we take that roll off of the discount through the P&L as a component of the gain. So I think what you saw a lot of in the first quarter was some of these positions that were marked quite significantly in the fourth quarter started to catch up to the P times Q value, if you will, and that had a major a major factor in the in that, as well as there were some positions that just did uniquely well that we had marked down significantly, or there was some sort of transaction that picked up. But the positions in the fourth quarter that we received, which were really the driver to the discount that we took in the fourth quarter. We in the fourth quarter of 2021, there were more positions that were had less liquidity and marketability, if you will, from a 144 standpoint. And so as you saw those start to lose their discount, that was what really drove the mark to market in the first quarter.
Got it. Okay. No, thank you. That makes sense. Last question I have is, with the reset value, so you have 13.7 million of resets that you recently disclosed. How much of that is restricted versus unrestricted?
But Louis, that's another question that if we could put into the Sequire community and add that in. Many of them, as you can imagine, are much closer to being unrestricted than a brand new deal, because we've held them for some time. Typically a company doesn't just hire us and then do a deal 2 weeks later. I mean, it's happened, but it doesn't happen very often. So, but we're going to break that out as well. We don't have it. We just added this new feature of showing the resets. And as we were doing that, we said, okay, let's break this down between what is receivable now and what we have to wait for. So we'll add that.
Okay, great. Thank you very much.
Yeah, for sure. Jim, how you doing? Jim McElry.
Yeah. Hey, Chris. Thank you.
How are you?
Can you talked about changing the amount of revenue that you're booking in cash. I forget the word you used, massively or significantly, with a goal of 50 to 60%. So when do you think you hit that?
I think by the end of this year, that our forecasts show us getting there by the end of this year.
So I think in Q1, it was around 85, 86%. So is it reasonable to think of that as a linear decline to 50 or 60%?
I
don't know. So I'll let Mike.
I think no, it's going to be a little less than. I think I know what you're asking. I mean, it's starting to pick up though. It started to pick up in in the fourth quarter for sure, but we still have a ways to go. I think when Chris was referring to the end of this year, you know, end of 2023. But it's hasn't been that linear decline. The other factor as well is the compression of the stock revenue to, you know, we've you know, we haven't seen as much of the renewal, but it's we could follow up with a more you know, I guess the gradient on that, but it's definitely not going to be that linear that you just described.
As our goal is that by the end of this year, 2023, that we're fully reliant, like the operating expenses of the business are fully reliant on the cash component of the business and not depending on the stock, because the stock has a lot of, you know, uncertainties in it.
And that would be a 50 to 60% of revenue coming from cash?
Correct.
Okay. I think in the queue, you had a fairly large concentration of the portfolio in just a handful of stocks. Is that, can you talk about the liquidity of that handful of stocks that comprise a big chunk of the portfolio? Can you quantify that in any way?
Yeah, you know, one of them, I could say, Chris, I mean, one of them was, you know, a company that went through a transaction into, I don't know if we don't want to say the name of the customer, but we went through a merger with a NASDAQ SPAC, and it, you know, in that particular instance, we had a discount that represented a you know, a hold period under 144 of a year. You know, in fairly low liquidity, and then we started to get out of it relatively, you know, almost immediately after the you know, the position we went through that reverse. But there were, you know, there are some of our positions that are in convertibles that you know, make a fair amount that we feel like we're, you know, fully protected. But it's you know, that changed. That distribution, you'll see that distribution change when we file our second quarter, you know, tremendously, as well as the third, and as we start to get some of these resets to add to the balance sheet.
I mean, there's over 100 positions, Jim, you know, across the board.
Yeah, understood. Okay. And I guess I'm just trying to understand a little bit about this. I'm checking the portfolio value right now, and it's showing an unrestricted balance or value of about $1 million.
Mm-hmm.
And that's been running 5 to 6 million rather consistently for Q4. So is that just a big change in value? Was that you managed to sell something, or can you explain the big drop in unrestricted value?
Yeah, we're selling stuff, and you know, a lot more stuff comes unrestricted in Q1 of this year. We have a lot of stuff that comes off restriction in Q1. So you'll start to see that pump up a little bit. But like I said, we've been doing a much better job in moving that stuff into accounts and starting to sell it. So the way we do it is, it's, you know, the team moves stuff in, and then there's just, you know, we just set it up. We say sell 10% of the volume a day on all of those positions, and that's, you know, the brokers that we use then start to sell 10% of the volume on any given day. And so we just stay out of the equation, let them start to do their work. And that we have found to be something that doesn't hurt the stock. Now, if there's another seller in the marketplace and the volume is going up significantly, you know, sometimes that could generate a lot of volume, and, you know, we'll get out of a lot of positions that way.
Okay, my last question is, given what you've said about the shift in revenue from stock to cash, and given what you've said about the portfolios getting I'm going to put words in your mouth, a little bit more liquid. Does that, has that alleviated tremendously or modestly the things that you've been doing in order to to keep the cash balances at a high level? Or
I think we're
to-
we're getting better now. Like I said, there was around $4 million worth of stuff that's being deposited, as we speak. And so I think we'll start to see the benefit of that. It ebbs and flows, and that's the most difficult part about our business from a cash perspective, is what we anticipate could be available for cash changes dramatically based on, somebody not filing something. And then all of a sudden that becomes unrestricted immediately, right? So somebody, or it becomes restricted again, even though we're unrestricted, we can't get the shares from the transfer agent. So there's a lot of uncertainty around that. So another thing that we've started to do to alleviate the problems around this is the services that we're providing are extending over the year period. And if we can't get to a point where we can start to monetize those positions, then there's the services that they have access to are the platform, the conferences, the videos that we do on microcaps.com, the spotlight videos and things like that are things that don't really cost money externally. They're internal costs for us, but we're not outside spending a ton of media dollars on that. So we've been able to manage to cut back on that stuff in contracts with, obviously we state this up front with the people buying the services, and we say, look, we'll step up here as we start to be able to monetize some of this activity. And so that's also helped us as well. But are we out of the woods on liquidity? I don't know that as long as we take stock that it'll ever be easy. It's a very difficult thing to do. It has its rewards, and we're starting to see that now. And I think as we start to monetize these positions that have all gotten the resets going, I think that's when we'll start to really see the benefit. So, and I think that correlation will happen with kind of like as our equity facility is being paid down, we'll be able to take cash out of these things that we're selling to pay things down.
Got it. Very good. Thanks a lot, Chris. Thanks, Mike.
Thanks, Jim.
Thanks, Jim.
Now, if there's any other questions that people have, you can ask them on sequirecommunity.com, and you can go to, we'll add all these questions that were asked. We'll add all these questions that were asked on that platform and with the transcript of the answer so you can see it. And I'd encourage you to, participate in some of the other companies that are on there as well, and start asking questions on their calls that they have, and, just get the experience of what it's like to use the Sequire community platform. I think you'll find it very interesting, and we're getting a lot of companies that are signing up for it. So we're excited of the adoption of it just over the short couple of months that it's been up and running. So thanks everybody for taking the time today. I appreciate it. If, like I said, if you have any additional questions, please ask them on the Sequire community platform, and we'll be sure to answer them. Thank you very much.